Good morning, everyone, and thank you all for attending today's COVID-19 business resource session. I really appreciate that everyone has shown an interest and is showing up to these sessions. We've had some great turnout and some great responses. I recognize how difficult it is for everybody right now, especially with the additional restrictions that have just been put into place again. You know, I know it's a struggle for all of us, and we're just kind of all doing the best that we can to kind of keep our heads afloat and keep moving forward. So with me today for today's session is Mark Reschke, and he's with Reschke Fritz. And today he's going to be going over the new T4 reporting requirements, particularly around some of the COVID-19 resources that businesses may have already taken advantage of or are considering taking advantage of. And we felt it was really important that we provided some factual information for people, because we know we're all being bombarded with information out there right now, and there's a number of resources. So this way we thought firsthand you'd be able to hear it from the experts, and then maybe have an opportunity to ask some questions. So what I'm going to ask as far as housekeeping rules right now is that if we all mute ourselves while Mark is speaking, and if you do have questions, if you please wait till the end, and then we can share them in the chat, and we'll go through them one by one as time allows, and hopefully provide as many answers as we can. So I guess without further ado, then I would like to introduce Mark and say, take it away, Mark.
All right, thank you, Michelle. Hopefully everybody can hear me, and if not, please let us know in the chat session if you can't see me or hear me. But anyways, no, thank you, Michelle and Ellen, for organizing all these sessions. I know it's a lot of good information that sometimes the general public doesn't have, you know, a bit muddled and a bit unique to find information on. And just wanted to start by saying, you know, Metrix Group, they did the last two sessions, and they did a pretty good job, and Hendrickson Black will be doing the next one next week, and Michelle can confirm. But hopefully everybody takes advantage of these free sessions, and just to get a little more understanding, or at least confirming what you know already. So I'm going to start the presentation, and today I will be talking about the new T4 process. And I'm just going to share my screen so hopefully everybody can see what I have. So right now in the screen, you should be seeing at least the first slide. And basically with the T4 process this year, it's going to be a little bit different, but it kind of captures everything that the government, you know, they're going to have a hard time trying to make sure everybody's compliant with everything. So this is just a method that they're going to use to make sure people that have claimed the CERB and all these different programs that all interlinks, and everybody was eligible, or if somebody wasn't eligible for the CERB, it will be found out via the T4 changes. And so today we'll talk about the T4 changes. We'll talk a bit about the temporary wage subsidy and the new form that has to be filed. And also, at the end, I do have some kind of common questions or scenarios that kind of put this all together and summarize the presentation. So when I first started looking at all this, I thought, oh, great, what hasn't changed? And really, everything is basically the same as before. The T4 still have to be filed by February 28th, coming this in the next 2-3 months. And also, basically, you complete the T4 slip basically like normal as you did in the past. But now, what are the changes to the 2020 T4s? And this is applicable to every and all employers, even if your company didn't make a CEWS or temporary wage subsidy claim. So this is strictly for the T4s. And this is also requiring you to report income paid within specific periods that line up with the CEWS periods. And you will see that in the next couple slides, what I'm talking about. And in the new reporting requirements, you have to include basically all employment and retroactive pay made during the periods. So what I'm referring to is on the bottom of the T4 is where these new boxes will go into. You'll see up above, basically, essentially the T4s are done as normal, but now we have a new section on the bottom of the T4 that you'll have to be mindful of. Common question, or at least something that came up, is, you know, what is included in these boxes? It's basically, and it's pretty generic, but it's pretty much everything to do with salaries, wages, bonuses, tips, you name it. Generally all things that are included in box 14. So, and we have 4 separate codes, and you'll see on this slide that you have boxes 57, 58, 59, and 60 that report wages in the different time periods, and they're meant to line up with the Q's periods, so it all kind of matches. So the first one obviously is for the Q's period 1 and 2, and so forth, with the last one only being the 1 period, which is period 7. The amount that gets reported in these boxes is generally any amounts paid during those time periods. So it's not necessarily the date or period that the employee worked. And here's I ran a couple different scenarios. Box 57 is for the period of March 15th to May 9th. And you'll notice that in the first scenario there, if you had a payroll run from March 1st to the 15th, and it's all paid on the March 15th, that pay period, those numbers will be included in box 57. Same thing, if you have a pay period going right, even though it's before March 15th, we have March 9th to the 22nd, but it's still paid within that date range of March 15th to May 9th. Again, that would be included in that box. And the pay period that maybe is tailing towards the end of that period, let's say you have a run from April 26th to May 9th, but it was paid on May 11th. You would not include this in code 57, but instead you would put it into box 58, because again, remember, it is when the remuneration is paid, not when the employee works. So that basically summarized the T4 changes. It's a bit unique, but now we're going to move on to the 10% temporary wage subsidy. And in the first link there, I put in that the website link for the 10% subsidy. And it's always a good idea if you've never done this, or if you have to file the forms, there is information on that website. It's always good to review it. Same with the Qs and all these other different programs. Always good to go to the website of the government just to say, if you have any questions, to look on there. So you'll notice that the 10% subsidy is close to the same time period as the T4 with the boxes being reported, but you gotta remember, this is a separate program from the T4 boxes that you have to report and the Qs. And this was initially, and again, a lot of people were aware of this at the beginning, this was only for a 3-month period from March 18th to June 19th. And this was where the employer would calculate based upon the gross salaries and wages and be able to deduct 10% based on the remuneration paid, keeping in mind that there are some maximum limits per employee of 1,375, and as each employer on a whole, they cannot claim more than 25,000 of the subsidy. And when you do all the calculations, you have to keep in mind that the reduction is only to the federal and provincial income tax portion of the remittance. So for items like CPP and EI, if the subsidy works out to be greater than the federal and provincial tax, you still have to give the CPP and EI amounts, but the federal component and provincial component can be cleaned out. And again, when you're doing the calculations, you're looking at eligible remuneration. Again, the same thing as before. You're looking at any salaries, wages, and bonuses, whether they're taxable or tax exempt, that gets included in your calculation. So for a employer, to be able to qualify, you had to have had a payroll account back in mid-March, and you had to been able to pay some remuneration to your eligible employees, which on the last bullet point is anybody employed in Canada. And for the most part, this crossed over a multiple of different entities, such as sole proprietors in partnerships, corporations, and charities. And the partnership in CCPC, the CCPC just is basically a normal Canadian corporation, but for the most part, a normal corporation applies. Again, if you have one of those two entities, then I would say go back to the website on the CRA, because they do have some different subparts to those two items. So initially, when you started the 10% subsidy, you didn't have to apply or file anything. Basically, it was left for the employer to determine what that 10% number was. And basically, the government let you file and just reduce your remittances accordingly. And what ended up happening is that now it's coming to the point where now you're going to have to recalculate or go over everything and make sure that you've done it properly. And again, the last bullet point is what I said before. It's fully applicable to reduce the federal and provincial tax, and CPP and EI, you still have to remit. So when you're looking to calculate the 10% subsidy, you want to first make sure you look at how many eligible employees you have, which for the most part is going to be pretty straightforward, because again, we're just worried about people employed here in Canada. And basically you want to be mindful of the first component, that is how many eligible employees do you have and what is the limit. And remember, for your company, you can't go over 25,000. Second part is you go through the steps of calculating your remuneration and then multiplying by 10. And then basically you would compare both of those two numbers. And essentially the lower calculation is your subsidy that you're entitled to. And you have to be mindful that when you reach the maximums, again, for each employee, because if they get paid a higher wage, that they might top out early. And so you just want to be mindful of that. And yes, you would run these calculations for each pay period you have from March onwards. So now we come to the point where now you have to determine what are you going to have to file. So the government says, hey, there's a new form, PD 27, which is something you're going to have to complete. And this is required for all employers who claim the 10% subsidy, and if you've claimed any CEWS amounts. And it also is applicable if you didn't claim the 10% subsidy reduction, but you just did the CEWS claim, you still have to fill out this form. So I know there's a number of people that never did this and went straight to the CEWS. You are still required to complete this form. And what CRA has said is, there's no official deadline. They just recommend that you file this form as soon as possible. And the reason is because when you go to file your T4s, if you don't have this form in basically ahead of time for them to determine your subsidy, initially they might view you as having not enough remittances paid in the year. That will just help avoid any letters in the mail that come afterwards. So basically CRA has recommended to have it filed before the end of 2020 or as soon as possible, and definitely before you process the T4. So they're basically saying if you could do it before the end of this month, that will give the government ample time to have it processed. So when you do file the T4s in January or February, everything will go along pretty smoothly. What I was trying to find online was what will the T4 summary look like? And this is an example of a T4 summary copy. I couldn't find anything that would suggest there'd be another box on the T4 summary. So until CRA comes out with maybe the new T4 summary, or maybe it's somehow included with the remittances, either it's going to be in that box 82, or they might have a new box. But just for now, I tried looking online, and even on the government website, I didn't notice anything that they had mentioned. They have not mentioned anything about revising or changing the T4 summary. So just to make sure when you do file, just always go back to the CRA website, look at the T4 guide, or at least the T4 summary they provide, and just double check to make sure you have the most current version of the T4 summary when you do file in February. So this form, you can find it on the above link. Basically, you just have to Google PD27 and you will get there. And basically, I do have a copy of what the form looks like coming up, but basically you have to make sure that when you do all your calculations and reporting, that it matches whatever happened or what you claimed on the Q's claims, because this is now going to solidify everything that you filed for Q's, the T4s and everything. And I know some people have asked, what happens if you never calculated the 10% subsidy at the beginning? Well, you're not worried at this point, because for the first bullet down there, if you have not filed any Q's claims for any wage subsidies, don't worry. You'll file this new 10% wage subsidy form. You'll get credit for your payroll account. It'll be seen as like an installment on your behalf. And then basically when you file your T4s, if there's an overpayment, you'll get that refunded back. So you're not worried if you never did this. If you did file the Q's at the same time throughout this last part of the year, you just have to remember that you have to net out any amounts that you claimed under the 10% subsidy against the Q's claims. So that is something that would have likely happened. But again, like I mentioned before, you might want to revisit and make sure that when you do your recalculations that everything does line up, because the government will get this new form. It will be checking against what you filed in your Q's, because you have to report it there if you did claim the subsidy, 10% subsidy. And so you just want to make sure everything ties in together. And if you didn't claim the 10% subsidy, and let's say for some reason you were not claiming anything for the Q's, then you're not even actually worried about this form. So as long as you have not claimed either of the 10% subsidy or the Q's, you don't even have to file this special form. So you're not worried at that point. And just some things to remember, most companies have one payroll account, but if you happen to have more than one, then you must file this form for each of the payroll accounts, and CRA recommends that you file it at the same time. And again, just make sure that when you're going through your calculations that you don't go over these limits, as CRA will definitely notice your calculations and probably recalculate and make sure you've done it correct as well. So the form PD27 looks like this. This is the first part. This actually is probably the easiest part in the whole process, because you're just putting your name, clicking off if you're a company or nonprofit. And then the second part, C, is where you would list if you have more than one payroll account. And that last circle there, what is your 10% subsidy amount that you're claiming? So for the most part, this component is fairly straightforward. Part D of the form is going to be a little bit different. This is where you're going to have to report your calculations. So down below where you look at the different pay period in the bottom left, basically your opening date. And again, this is every line will represent for every pay period you have from March 18th to June 19th. So you're going to want to make sure you have your calculations listed for each of these columns for each pay period. So in this example, I'm assuming I have a monthly pay period at the end of every month. And so you're going to start your calculation on March 18th, go to the 31st, and likewise move on. So you'd have 4 lines. And again, in the middle section, you would be choosing and reporting all the different numbers. And ultimately, the last column where they talk about the percentage, and we'll talk a little bit more about that, but you have a choice to claim anywhere from 0 to 10% of the subsidy that you want to use. So we'll go over some scenarios where if you have calculated that you will not take the 10%, but you've done the Q's instead, you will be choosing a 0% just to say, I was eligible for something, but I chose not to claim it, and I've been using the Q's instead. So this form, is going to take a little bit of work. And like I said, if you do your calculations and revise, the government has enough information from this to recalculate your numbers. So you'll want to make sure you've done everything correctly. And ultimately, when you're done, you can file the form usually through my business account and submit it that way. Probably would be, you can mail it to the government, but I would recommend not. You could fax it and your accountant can file it through RepAclient. So I think for the most part, most businesses will use my business account or their accountant to file it. And if you don't have those, then you're going to use the fax number just to make sure that you have a confirmation that it went and was accepted. And if you do mail it, then just make sure you maybe pay for the registered mail just so you can track it to make sure CRA receives it. So to kind of summarize everything, the flow of what you're going to be doing this next month or two is you're going to go back and recalculate if you've claimed the 10% subsidy. You're going to go back and calculate all those numbers, make sure that you've done it properly. And then what you should be doing is comparing it to what you filed it on your Q's claims. And I know that I've heard different scenarios where bookkeepers might have done the 10% subsidy because they prepare payroll for their employers. And then maybe the tax accountant might do the Q's claims. And you just want to make sure that as a bookkeeper, I'm just thinking out loud, is you'd want to connect with that accountant and just say, here's my calculations. Make sure everything is lines up. And if there is any problems, then you're gonna have to deal with it. Maybe you have to amend some forms or some claims. And you file the form here as soon as possible, hopefully towards the end of this month or early January. And then you just file your T4s like normal at the end of February with those new codes on the bottom. So now I'm gonna go over and some kind of common questions that kind of summarizes the whole presentation. First question, will Simply or Sage or QuickBooks solve all my life's problems? And so far when I checked online and even with the programs we have, both Simply and QuickBooks don't report the wages for those new boxes on the bottom of the T4, but there was some online discussion that they are aware of all these changes. So they will be going through and probably updating the programs to make it work. So just so you know, just make sure your Sage and QuickBooks programs are up to date with all the updates. And if it's not there yet, you just might want to wait to, a few months or so, at least till January, February, to make sure that those boxes show up. If not, then yes, you will be required to go back and calculate this and manually put it in. So if you're filing it through QuickBooks or Sage directly to CRA, you're going to want to make sure that those boxes show up when you preview. What happens if my company didn't apply for the 10% subsidy or the Qs? Do I still have to report the remuneration on those 4 boxes on my T4s? And the answer is yes. This component of filing on the T4s, all those different boxes, it's applicable to all employers, whether you claimed any of the government programs or not. Or how about my company forgot to reduce remittances for the 10% subsidy? Do I lose any benefits I was entitled to? And I did not claim any Qs during this time. And the answer is no. Even if you didn't take advantage of the program, you're still going to be eligible for the 10% subsidy. You would file the form like normal and it'll be credited to your payroll account. And likewise, if you don't want it, you don't have to file anything, because if you remember, if you don't file for any, if you never took advantage of the 10% subsidy or the Qs, you don't even have to file that special form. What happens if my company didn't reduce the remittances for the 10% wage subsidy and then later filed the Qs? What do I do? You remember, you still have to complete that special form, but when you go to fill out that percentage on the far right in those columns, you'd probably be using a 0% to say I'm not claiming anything. But note, you might want to look over the 10% calculation and maybe compare it to the Qs claim in that first couple periods, just because if the 10% subsidy is more than what you claim for the Qs, you might be eligible to have a little bit of an extra remittance available to you that wasn't otherwise there with the Qs claim. So you still probably want to calculate it and compare. And again, you're just trying to wrap this all up to kind of say, what is the most I could take advantage of? And how about my company reduced remittances for the 10% wage subsidy, and later I filed for the Qs, but I forgot to net out the 10% subsidy against my Qs claim. What do I do? This is where, like I said, if you connect bookkeepers with the tax accountant or the owners with the accountant, whoever's doing your Qs claim, you might want to let them know what you've done, because you might have to go back and amend the Qs claims, because again, once you complete that PD 27 form, the CRA will be comparing everything and making sure you've done it correctly. So that one, this probably would give the most headache because it requires some amending, but it is going to be something I would imagine the government will be able to connect the dots and make it so they know if you've done all the calculations right or not. So that's basically my presentation. I'm going to stop sharing the screen here. Hopefully that was detailed enough, and I'll be checking to see if anybody has any questions.
Fantastic. Thanks, Mark. I won't lie as a non-bookkeeper and say that doesn't seem confusing, but I'm hoping those that it applied to understand it a little bit better. And please feel free, if you have a question, to log it into the chat and we'll go through it. So right now, I have a question from an Amanda. If you apply for the twos online, do you still have to fill out and send in the PD 27?
If you look at if you filed for the 10% subsidy and that PD 27 form, if you've done it online, the answer is no. The CRA already has that form. You've just submitted it electronically. So you would not want to duplicate it. So that's where you just want to make sure if you've done it online, keep that confirmation with you, because usually at the end of when you file anything online, the CRA website will give you a confirmation. Keep that. But hopefully that's the intention of the question is yeah, no, you do not have to file it in a second time and send it in.
Okay. Next then is, can this presentation be shared? So I'm not as familiar with this as Ellen would have been, but I know oftentimes she'll drop it right here in the chat box. I'm not sure if you're able to do that, Mark. And if not, if you could share with me, then we will do our best to share it with the participants.
Okay. Yeah, no, I can PDF it and I'll email it to you.
Okay, that's fantastic. Do we have any other questions for Mark today? Wow, I'm surprised with the number of people that are here. Okay. Okay, so I have another one here from Carol Webster. If I had no payroll between March 18th and June 19th, but brought employees back after, how does that work?
Now, on the one commentary that is on the website with the government, it mentions about retroactive pay. So if you had retroactively rehired because you were looking to perhaps take advantage of the Qs claims, you're going to want to look back and say, yes, the payroll that you've retroactively paid applies to what period, and then probably go through the calculation that way. One thing I will note is if you do have anything unique, there is probably a phone number on the government website to phone in and just double check. But I would say if you go back and recategorize what that pay is for, best is always to phone the government with anything unique, and definitely go online. But they did mention about retroactive pay and recalculating your subsidy that way.
Okay. Perfect. I guess people are saying the reason they're not asking questions is because they're in shock of the details, which I can't blame them. So next question, though, coming from Veronica, is where do I claim income earned by employees while on CERB?
So this component is, as the employer, you do not have to report anything to do with the CERB. That is a separate program. So I would imagine every employee that did file for it, they will get a slip from the government. The whole purpose of that first part with the T4 changes is that CRA will compare like I say, for example, the first 2 periods of the Q's claim, if you put in there that the employee earned some wages in that period and the employee applied for the CERB in those first 2 periods, the employee is going to have a problem. And if they do have a problem and they didn't know what to do, there is a way to pay the CERB amount back. But that's something, unfortunately, the employer probably has no control over, the employee. So if you do have any employees that have that situation where they were in fact being paid, or you've heard that they've taken the CERB, but you've still paid them, you might just want to warn them saying, hey, go back and revisit. If you're not entitled to the CERB, pay it back, guaranteed. With the way this is going to work, once the employer files the T4s, the government will be doing a comparison of those who are on the CERB and lining up with the T4 boxes. It may not happen right away, but I would imagine that in the next year or 2 or more, things will line up and they can do the diagnostics for that.
Okay, thank you. Next question is, what about employers who obtain the Q's relief through their bank accounts? Would they have completed the form PD27 online?
So if you filed for your Q's and you've done it online, received the money back from the government based upon what you filed, this PD27 form is a totally separate form. So you got to remember, all these programs are kind of related, but they're separate. So if you filed the Q's, you have not yet filed this PD27 form. You may have reported on the Q's for the first 3 months that you did have a wage subsidy, the 10% that you reduced your claim by, but you have not in fact filed the PD27 form. So you'll want to make sure you filed the PD27 form separately. And again, one of those one of those methods of either online through RepAClient or my business account, or faxing it in.
Okay. I have a question, Mark. Do you anticipate that businesses are going to pay more this year for their year ends and so forth based on a lot of these different reporting sections that need to be included?
I guess that would be up to the tax practitioner. I think that if you were to be diligent and help your accountant out, you might want to help calculate all these things out for them. That maybe they're just reviewing it. That's just one option. Yeah. But I would imagine that in the T4 process, if you just dumped on your accountant, here's all my records, you figure it out. I would imagine the answer would probably be yes. Probably doesn't impact the year end, but it will probably impact the T4 process. And just some other nice thing, if you want to be in your good books with your tax accountant, you might want to do this all and give them all the information well before the end of February, because if you dropped it off on their plate on the 28th, hoping that they will have time to do all this in amongst everything else that they're doing, be kind to your accountant and get it in early.
Good comment. All right, thanks. It looks like we have another one here. Is entering the information for a Q's claim through the My Business account what you are referring to as filing online, thus making the PD27 not necessary, or were you referring to some other filing method?
Okay, so you filed the Q's claim online. That was that for that program. And no, you have to file this PD27 form separately. So you'll want to make sure you file it, even if you never have any, if you calculate out that you don't need it, you've done the Q's, you still have to file this PD27. The question on the far right of that form is, when you do all the calculations, you would claim a 0%, just to say, I'm not claiming anything for the 10% subsidy, but you still have to file it. And if you remember, every corporation that either has taken advantage of the 10% subsidy or the Q's has to file this form separately.
Okay, thank you. So we have another one here. Hi, I just applied for the Q's, not the 10%. Do I still need to enter all amounts on the PD27 for income tax, EI, CPP remitted for that period, or just if you applied for the 10%?
Kind of related to the other comments, but yeah, it's a good question. If you do apply for the Q's and you said I didn't need to take advantage of the 10% subsidy, you still have to file for it and still report every pay period. That's the way the government website reads, is that even if you're not going to claim anything out of the 10% subsidy, that PD 27 has to go in. So even if you've got zero to claim, unfortunately, it's got to go in. Yes, you do have to take the time to put your numbers in and calculate out the number just for you to fill out the form and say zero. Unfortunately, that has to happen.
Okay, so it sounds like in almost all cases, you're going to have to do both. For sure. All right, are there any other questions that we might have for Mark today? I'll give it another minute or so. But in the meantime, Mark, thank you very much. We really appreciate you taking the time today and sharing this information. I know the ones that we've partnered with, the accountants in our region, have been very successful. And so we appreciate it and look forward to hopefully doing more as well. In addition, for anybody who is looking for other resources, feel free to reach out to Community Futures, whether that's information through us in terms of training, coaching, pivoting your business plan, or a loan, or even some of these government programs. We have a lot of information and links that we can share with you. So anybody who did register for today's session through the Eventbrite link, we will have your contact information, and we will share Mark's presentation today through those email links. If you somehow manage to log on today without registering, please provide your email information in the chat box, and we will be sure to include you as well. One other question here. It looks like you mentioned that you have to include tips in the new T4 boxes. Is that only if you pay them to employees, not if they are paid to them directly?
That's a good question. I would imagine that as the employee, if the employer is paying the tips through the payroll, that would be through the normal process, so you've included it. If the employee gets cash tips and it's up to them to report that income, there's no way of the employer really knowing what those tips are. So in that case, it would make sense that as the employer, cash tips, you're not tracking, but the employee has to track that separately. That's a very good question because, like I said, all these government programs, they have a generic wording, generic comments that they assume everybody does payroll properly. But in that case, I think you would want to notify the employees saying you're not claiming it through the T4s, but they are still, as an individual, supposed to claim that as income on their personal tax return.
Excellent, thank you. Okay, another one. Obviously, through my QB, it does not record the amounts that I've claimed for each employee for the Qs. So do you think it will end up being a manual entry we will need to enter into the new boxes on the T4?
This morning I looked up and I just Googled if QuickBooks was going to update their program, and all they mentioned this morning, and this was a few days ago in the comment, they were looking to upgrade and make it so that it all works. I would imagine that if you maybe didn't use the payroll function perfectly, there's got to be a way to perhaps put the numbers in. If not, and let's say you didn't use the payroll function completely right, it probably would be best to then print off the T4s and manually write it in, and somehow send that into the CRA, because I would just imagine that if you sent in through QuickBooks and it doesn't have those boxes on the bottom, the government might say you haven't completed it correctly, and you don't want to have them on your end chasing you for that information. So that's a difficult question to answer, but like I said, just make sure that your QuickBooks subscription, same with Simply and other programs, are caught up to date, and maybe just wait for that update to happen. If it's a manual entry, great, then you can go ahead and do it. But if not, you're going to have to look at other methods to file the T4.
Okay, fantastic. Do you have any other little tips or words of advice, Mark, before we sign off that people should be considering for this year's tax implications?
I would say for any accountants, connect with your owners and connect with the bookkeepers, and likewise bookkeepers connect with the accountant, just to make sure everybody's on the same page. Probably is a good idea to do it ahead of time and just warn everybody, this is what I've done. Just because once these forms go in, and like I said, if you fill out the new 10% subsidy and claim an amount and your accountant has not claimed it on the Q's claims, you don't want the government finding out later. I'm just saying you probably want to amend anything to do it right. And basically you're trying to avoid any audits from the government. So if you do everything right, you can amend anything, which is great. But you just want to do it all properly so that if they ever come back, you don't have any problems. So I think the communication between all the parties is going to be really relevant. And even just coming to mind is even talking to the owners and saying, did you claim the CERB back when it came out? And if we're going to file your T4s, are we going to have a problem if we code anything on those boxes? Because that'll be discussion the accountant and the owner is going to have. Just because, again, you don't want to file these T4s and then find out later the owner's taken the CERB and you've got a little bit of a problem to deal with. So I think it's going to be communication between all the parties is going to be important.
Good, sound advice. I see we have one last quick question here. If you didn't claim any other subsidies when submitting previous payroll remittances, can you claim it all now at year end?
Yes, so let's talk about the 10% subsidy. Yes, if you've never taken advantage of it and you want to file the form and you calculate and say, hey, I'm owed $3,000. Yes, you can still file it now. Again, it'll be showing up in your payroll account as basically like an installment from the government side. And when you file your T4s, you'll probably have an overpayment on the T4 summary. So that 10% subsidy will be refunded back. And the other component is if you do, I'm not sure if the question is asking you about the Qs, the wage subsidy. Yes, you can still file your Qs wage subsidy. You have time, I believe, to the end of January, if I'm not mistaken, to kind of get that all in. So you just want to make sure that in the next month or two, you've got it all figured out, filed, because you don't want to be late. And if you have the Qs to file, don't be late on that one as well, because if it's past the deadline and you were entitled to some money coming back, you don't want to be late.
Great, fantastic. Well, Mark, thank you very much. We really appreciate your time here today. And if anyone has any questions, feel free to reach out to our office and we can try to point you in the right direction with answers. And I think that's it for today's presentation.
Right. Well, thank you for coming. Any questions? You know where Michelle works.
Yeah. Thanks, Mark. Appreciate it. And thanks to everyone for joining in today.